The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Welcome to another edition of Zacks Rank Buy. I am Brian Boland, and I am the aggressive growth stock strategist. And I have two more stocks for your aggressive growth radar screen. So let's get right to it. And our first pick is the Andersons, and that's ANDE for the ticker. It's a Zacks rank #1 strong buy, and it has an A for value and A for growth. Normally I like to see that F for value, because that would tell me right away I'm on the right path for the aggressive growth, because growth investors and value investors are almost always looking for different things. But in this case, they're on the same spot here. So this is agricultural products, and fertilizer, turf products. Maybe you've seen these around as your lawn tries to get up to snuff here. Let's go through our normal lists here. We're going to look at the earnings. So over the last year, we see a big miss and then a big beat, a nice beat, and then a gigantic beat most recently here. So really, crushing the number here. So management might be a little bit skewed there and not letting analysts have it, or not communicating the best to Wall Street. So this is interesting for the Zacks rank. This quarter is holding at 17 cents because only 60 days count in terms of the window of earnings estimate revisions. So even though for 90 days right there, that number would look terrible, it would not help. But here we see next quarter staying still. But for the full year, we're going up from 233 to 294. For next year, we're going, I don't like that. We're going down. Interesting. Sometimes these things happen. Sometimes you get a current year moving up so much, which is probably the case, that it negates the downside of next year. All right, we're going to take a look at sales, and normally I want to see a much bigger rate than this, but we can see we're cheating a little forward here. There's our sales forecasts for this year and next year. So it's tough to move the marker there when you're putting $17-18 billion on the scoreboard there. But as long as there's growth, that's what I want to see. So let's take a look at this valuation. 14 times is quite a bit, but when we see year over year here, 23 times sales, or 23% growth over the last year is great to see. Your price to book, this is why your value guys are loving this stock, is right at 1. You're buying this company right now for the exact value of all of its assets. When you think about 3% top line growth with that, you're going to automatically make 3% basically if you can hold your margins steady. And boy, look at this, your margins, that's no good. But I mean, they're super razor thin here. We'd like to see some improvement. We get some improvement there that could make a big difference here. 0.08 sales. Woof. I'm telling you, they're not giving this stock a lot of love. But let's see what's been going on with it. So it's super not exciting, but it has had and look at this. This is the pandemic. The world's going to end, but suddenly we all need agriculture. And then right up here, here's that miss, and then we're coming back. Are we headed higher? I think so. Is this one of these stocks that on the face doesn't seem like an aggressive growth stock? For sure. Are the numbers lining up more for a value play? For sure. But it came onto my radar screen, and that's why I found it interesting, and I thought you should see it. So it is the Andersons, ANDE. All right, let's jump ahead to our next one, and it's Vaalco Energy. Vaalco Energy, and that's EGY as the ticker, and it's a Zacks rank #1 strong buy. Boy, oh boy, and this one, my screener must be broken on me because I saw this one as a good one, but maybe not. We'll see. So value is an A and growth is a C. I can't believe that this is happening, but it is happening, so let's go through it. Here it is. Let's jump through. It's one of these energy stocks. A beat, a big miss, a huge beat, and then no estimate here. So we're a little bit all over the place. Here are our estimates. How are you looking, estimates? 45 cents to 49 cents. That's good. 47 to 55. That's great. $1.83 to 2.19, and no estimates for next year. What's going on? Someone get some coverage on this. Let's get rid of those lines and bring this up. And we're going to cheat. Ooh, boy, growth. This is why this came out of my radar screen. Huge growth. That's great growth for this year. But of course, that's last calendar year. Contraction this year. Oof. Maybe my screen is broken. Anyway, as we continue on here, look at this. What a value play. 1.97, 2 times price to sales, with 71% top line growth posted in the most recent quarter. A price to book right at 1. Boy, oh boy, these value names sneak up on me. Your margins are pretty high here, but going the wrong way. Don't like that. All right, take a quick look at the price and consensus chart, which shows us our earnings estimates and where the stock has been. And we can see these estimates are short-lived. Something's going on here with the analysts who are not covering this thing long enough, I guess. Let's get rid of those and just take a look at our general thing. The world's going to end, pandemic, and no, we actually need oil, but maybe they don't like oil. And recently there's been that pop, OPEC's cutting production, and that's going to send the price of oil back higher, or at least it did for a day. So there we have it. 2 growth stocks that are parading as value names that are parading as growth stocks. Either way, they're both very interesting. Well, that was a lot of fun. Make sure you join us next time when we put 2 more stocks on your aggressive growth radar screen. And until then, be sure to go to Zacks.com/promo for all of our latest promotions.